Hi, I'm Pat Keon, a Senior Research Analyst with Ffir. I'm here to speak to you about the fund flows activity for the week ended Wednesday, December 4th. We'll start this week's report by taking a quick look at the market activity. The major equity indices were in the red for the fund flows trading week. The Dow Jones Industrial Average, the NASDAQ Composite, and the S&P 500 Index lost 1.8%, 1.6%, and 1.3% respectively this week. Despite these losses, all three indices are still in the black for the fourth quarter, led by the NASDAQ with a gain of 7.1%, while the S&P 500 and the Dow are up 4.6% and 2.7%. Trade tensions as well as soft economic data weighed down the markets this week. The week started off with lackluster in-store Black Friday sales, hurting retail stocks, and the release of a weak U.S. manufacturing report. The November report from the Institute for Supply Management indicated that U.S. factory activity fell for the fourth straight month, and new orders fell to a level not seen since 2012. The U.S.-China trade war escalated somewhat as differing points of view over the Hong Kong protests threatened trade talks, and President Trump stated that a trade deal with China might have to wait until after next year's presidential election. In addition, President Trump targeted Brazil, Argentina, and potentially France with new tariffs. Trump announced that effective immediately, the tariffs on steel and aluminum from Brazil and Argentina would be reinstated, while for France, he threatened tariffs on over $2 billion of their products in response to a new digital services tax in France that would hamper U.S. tech companies. Well, let's turn our attention back now to the week's fund flows results. We'll start by taking a look at our fund macro groups. For the week, equity mutual funds suffered net outflows of $3.8 billion. Taxable bond fund and Muni Bond funds took in $1.7 billion and $411 million respectively, while money market funds had the largest net inflow for the $22.4 billion. We'll now explore the changes in each one of these asset groups more closely. We'll start with our equity mutual fund group. The $3.8 billion net negative flow was its 42nd straight weekly net outflow. The lion's share of this week's net negative flows came from domestic equity funds, as they saw around $3.5 billion leave their coffers, while non-domestic equity funds had net outflows of around $234 million. Among the peer groups, large cap growth funds and international multi-cap value funds had the largest net outflows in both regions, with net negative flows of $660 million and $160 million respectively. We'll move on to our equity ETF group now. Equity ETFs recorded their 8th straight weekly net increase as they took in $8.7 billion of net new money. The largest individual contributor by far among equity ETFs was SPDR S&P 500 with an increase of just about $6 billion. The Industrial Select Sector SPDR ETF had the largest net outflow at $652 million. We'll turn our attention now to taxable bond funds, starting off with the mutual fund side of the ledger. This group experienced its 9th consecutive weekly net inflow as it took in $1.7 billion in net new money. The largest net positive flow among the peer groups belonged to the ultra-short obligation funds and core bond funds, which had net inflows of just about $1 billion and $900 million respectively. Moving on now, we'll look at our taxable bond ETFs. This group had net outflows of just about $600 million last week. The largest individual net negative flows belong to the iShares 7 to 10-year Treasury Bond ETF and the iShares iBox Dollar High Yield Corporate Bond ETF, which saw $573 million and $327 million leave respectively. The largest individual net inflow belonged to the PIMCO Enhanced Short Maturity Active ETF, which took in just about $300 million in net new money. Let's turn our attention now to the Muni Bond Fund group. This group ran their streak of weekly net inflows to 48 last week, as they had positive net flows of $411 million. The net inflows were once again concentrated within the national muni peer groups, with general muni debt and high yield muni debt leading the way with net inflows of $155 million and $80 million respectively. Our last group to review is money market funds. Money market funds paced the week's net inflows among the asset groups as they took in $22.4 billion in net new money. All of the peer groups within money market funds recorded net inflows for the week, led by institutional, U.S. government money market funds and institutional money market funds, which grew their coffers by $10.5 billion and $4.9 billion respectively. Well, that wraps up the report. If you'd like to take a closer look at the data for yourself, please go to our website at www.lipperusfundflows.com, and please join us here again next week where another one of our analysts will be speaking about the week's fund flows activity.